Imagine a world where the price of silver is no longer determined by the market, where governments across 50 nations suddenly decide, this is as low as it goes. If you own silver, copper, or rare earth metals, this is a wake-up call. The rules have changed. No longer does the market freely rise and fall. There's a safety net beneath it, a floor engineered by governments with a single goal: secure supply. This isn't theory, it's happening now. And the implications are enormous: industrial, geopolitical, and financial. Silver may never be this cheap again. For decades, the price of metals like silver and copper has been controlled by simple supply and demand. Mines produce, buyers purchase, and the market decides the value. That's how a free market works, or it used to. Now, governments are stepping in to alter the game. They're creating a price floor, an artificial minimum that ensures the price cannot drop below a certain level. The reason isn't altruism, it's national security. Mines shut down when prices collapse, supply chains falter, and today, supply cannot fail. The world is electrifying at record speed. Data centers, AI, electric vehicles, and renewable energy infrastructure all consume metals at unprecedented rates. Military technology, from drones to advanced electronics, relies on silver and rare earth elements. One production halt can ripple through the entire global economy. Governments know this. A falling price isn't just an economic problem, it's a strategic vulnerability. If the price of silver drops too low, mines close. If mines close, supply diminishes. If supply diminishes, industrial progress slows, military readiness weakens, and geopolitical leverage shifts. No country can afford that. This is why Washington, along with dozens of allies, has coordinated to intervene. The market is no longer allowed to fail. Governments are buying, subsidizing, and regulating to protect supply. They're enforcing rules that keep production alive at any cost. This is not just theory, it's happening now. The stakes are enormous. Investors, manufacturers, and ordinary citizens all face the consequences. Prices may rise artificially, costs may increase, and the free market as we know it is being rewritten. The problem is simple. Critical metals are finite, demand is skyrocketing, and governments are taking control of the market to ensure these resources remain available. If you don't understand this shift, you're exposed. Now, here's the twist. This isn't just about silver or copper, it's about who profits when governments enforce these price floors. It's not always the miners. Often it's the middlemen, the brokers, and those who control the financial plumbing. They capture the spreads, the difference between buying and selling, and in doing so, control the flow of wealth from raw resources to finished products. Consider the supply chain. Digging ore is only the first step. Refining it into usable materials is where real power lies. For decades, much of this work has been outsourced to countries like China. They refined the metals, produced the chemicals, and sold the final product back to the West. The US and Europe depended on foreign capacity for industrial survival. Now, governments want to rebuild that domestic capacity. They're signaling to investors, we will guarantee prices, we will stockpile, and we will support the painful work of refining here at home. But rebuilding this capacity is not simple. Environmental permits, local opposition, toxic chemicals, and the sheer scale of investment make it a decade-long project. And the clock is ticking. Demand isn't slowing, it's accelerating. Stockpiles can only buy time, not replace industrial capability. Governments are effectively bribing companies to endure the costs of this transformation. And then there's the currency angle. This is not just about metals, it's about money. China is attempting to use gold to challenge the dollar, while the US coordinates supply and stockpiles to maintain leverage. Materials and money are now inseparable. Whoever controls supply chains controls the tempo of global competition. And that's why understanding this isn't optional. It's essential for anyone with savings, investments, or exposure to global markets. The story isn't just about metals. It's about trust, industrial resilience, and strategic positioning. And here's the kicker. Physics, not politics, will ultimately determine who wins. Metals can't be printed. Every ounce mined requires energy, expertise, and infrastructure. Every failure in supply risks cascading consequences. By the time prices react, the world could be scrambling to catch up. But there are signals you can watch, patterns you can track, and strategies you can implement to survive and even profit without panicking. That's the next part of the story. Let's dive deep and see what's really happening behind the headlines. The story of silver, copper, and rare earth metals isn't just about mining. It's about control, strategy, and survival in a world that's electrifying faster than anyone imagined. The US and its allies aren't tinkering at the edges. They're rewriting the rules of the market to protect critical resources. Imagine running a mining operation. You've spent years navigating permits, investing billions in equipment, and finally, you reach the point where ore starts coming out of the ground. The global market should reward you with a fair price. But what happens if it doesn't? Overnight, prices can collapse. Suddenly your project is unprofitable, workers are laid off, and decades of effort vanish before you sell a single ounce. That's exactly what governments are trying to prevent with a price floor. By guaranteeing a minimum price, they eliminate the risk that has historically slowed investment and expansion in critical metals. Mines stay open, production continues, and the global supply chain doesn't collapse. But the story doesn't stop at extraction. Mining is dramatic and visible. Big trucks blasting rocks and mountains of ore. But it's only the first layer of a much more complex system. The real power lives in refining and processing. Turning raw ore into usable materials is incredibly difficult, expensive, and often toxic. For decades, much of this work was outsourced to China. They built the plants, trained the chemists, developed the infrastructure, and managed the waste. The West simply imported the finished product. This created dependency. The raw material could be abundant, but if refining capacity is controlled by another nation, the supply chain becomes a strategic vulnerability. Now, governments are trying to rebuild domestic refining capacity. That's no small feat. Environmental regulations, local opposition, massive capital expenditures, and years of construction make it a decade-long endeavor. Even with a price floor, companies won't invest without guarantees. That's why the U.S. and its allies are signaling to investors, we will ensure you can operate without risk of bankruptcy. The price floor isn't charity, it's an incentive. It's designed to make building refineries in your own country financially viable despite the cost, complexity, and political headaches. Stockpiles are another piece of this puzzle. Governments are accumulating enormous reserves of critical metals, billions of dollars worth. These act as buffers, absorbing shocks in the supply chain and preventing panic. But stockpiles are temporary solutions. They can buy time, but they don't replace industrial capacity. A warehouse full of silver doesn't produce solar panels or electric vehicle motors. Factories do. Skilled workers do. Infrastructure does. That is why governments aren't stopping at price floors. They investing in the entire ecosystem from mine to factory to finished product. The financial layer adds even more complexity. Price floors create spreads, the difference between the guaranteed minimum and the market price. Those spreads are captured by brokers, traders, and middlemen who understand the system. The miners may survive, but the true profits often flow to those positioned at the intersections of finance, contracts, and logistics. For anyone watching as an investor, this is where opportunity lies, but only if you understand the mechanics of the system rather than just chasing headlines. Geopolitics is inseparable from this story. China dominates refining capacity and holds significant leverage over global supply chains. By coordinating price floors and stockpiling metals, the U.S. and its allies are signaling a strategic pivot. They intend to reduce dependency on foreign refining, rebuild domestic capacity, and create resilience. This isn't about temporary advantage. It's about reshaping the rules of industrial power. Currency dynamics make the story even more intricate. Nations are diversifying away from the dollar, seeking assets like gold and silver as reliable reserves. These metals cannot be printed. Unlike paper money, they are finite, tangible, and strategically critical. Controlling their supply strengthens both industrial and financial security. Governments are essentially aligning industrial strategy with currency strategy, linking metal availability to economic influence. And here's the human side. Most people live in a world of numbers on a screen, paychecks, savings, and retirement accounts. But the real value of those numbers depends on supply chains and material availability. When critical metals become scarce, prices for electronics, energy, and transportation rise. A guaranteed price floor may stabilize supply, but it also increases costs downstream. Ordinary citizens may not see the mines or refineries, but they feel the impact in their daily lives. Grocery bills, utility costs, and the price of goods. This brings us to industrial strategy. Supply chains have layers: extraction, processing, and manufacturing. Many focus on extraction because it's visible and dramatic. But the real leverage is in processing, the factories, the chemistry, the technical know-how. Without it, mines are just holes in the ground and raw ore is useless. Manufacturing adds another layer, but it relies on the prior two. The U.S. and its allies are focusing on rebuilding these middle layers because that's where industrial independence and strategic power truly resides. Finally, think about timing. Demand for metals isn't slowing. Data centers, renewable energy, electric vehicles, military technology, and high-efficiency electronics are accelerating. Governments are acting now because waiting risks catastrophic shortages. Stockpiles, price floors, and industrial investments are signals to the market. The supply of critical metals will be maintained, and scarcity will drive value for those positioned correctly. In essence, this story is not just about metals. It's about survival, resilience, and strategy in a rapidly electrifying, resource-dependent world. Mining is the first step, but refining, manufacturing, finance, and geopolitics are the real battlegrounds. Those who understand this layered system have a massive advantage. Those who don't risk being blindsided by the next supply shock or policy shift. The lesson is clear. Silver and other critical metals are no longer ordinary commodities. They are strategic instruments tied to industrial power, national security, and global finance. The price floor is a signal that scarcity is real, supply is precious, and the rules have changed forever. Here is the core truth. The price floor isn't just a safety net. It is a lever of power. Governments aren't intervening because they like miners or want markets to be fair. They're intervening because strategic metals are now indispensable for technology, energy, and defense. By setting a guaranteed minimum price, they ensure production continues even when the free market would otherwise punish inefficiency. Mines stay open, refineries stay operational, and critical supply chains remain intact. But this doesn't mean profits flow evenly. Often, it's the middlemen, the brokers, traders, and financiers who capture the largest margins, not the miners themselves. Understanding who benefits from these shifts is the first key insight. Silver, copper, and rare earth elements have transformed from ordinary commodities into tools of industrial and geopolitical strategy. Price floors act like a floor under a trampoline. They prevent catastrophic collapses but allow upside potential to explode. When global demand spikes, as it inevitably will with electric vehicles, AI data centers, renewable energy, and military technology, the guaranteed baseline ensures that supply doesn't dry up and the market doesn't collapse under scarcity. But it also guarantees that profits flow to those positioned at critical points in the system, those who control contracts, logistics, and financial channels. Stockpiles reinforce this strategy. Governments are storing billions of dollars worth of metals to prevent temporary shortages from creating panic. But stockpiles are temporary. They can stabilize markets in the short term, but cannot replace industrial capacity. Factories, skilled labor, chemical processing plants, and long-term infrastructure are the real backbone. The price floor alone won't rebuild these systems. It's the incentive, the signal to investors, that makes the reconstruction of industrial capacity possible. Without confidence that prices won't fall catastrophically, no one would risk building new refineries or expanding mines in politically and environmentally complex regions. The reveal gets even deeper when we consider geopolitics and currency. China dominates refining capacity and has historically controlled the middle layer of the supply chain. By enforcing price floors, stockpiling metals, and signaling coordinated action, the U.S. and its allies are attempting to reduce dependency on foreign refinement. Metals aren't just financial assets, they're strategic leverage. Combine that with the fact that nations are diversifying away from the dollar, seeking tangible finite assets like silver and gold, and the picture becomes clear. Scarcity, industrial power, and currency strategy are now inseparably linked. Whoever controls supply chains can influence both material availability and economic stability. For ordinary investors and citizens, the implications are profound. Rising costs for critical metals eventually ripple through the economy. Electronics, energy, vehicles, and even food prices are affected. The price floor protects supply, but also raises costs. Understanding this isn't about panic, it's about preparation. It's about recognizing that silver and other metals are no longer passive commodities. They are strategic instruments shaping markets, technology, and even national security. In short, the reveal is this. Governments are orchestrating a system that stabilizes production, incentivizes investment in domestic processing, and signals to markets and adversaries that supply will remain controlled. The price floor is both a guarantee and a warning. It limits downside but leaves upside open, creating an environment where those who understand the mechanics can benefit, and those who ignore them remain vulnerable. Silver, copper, and rare earths have moved beyond economics. They are now at the center of industrial resilience, financial strategy, and geopolitical influence. The takeaway: the world has changed. Scarcity drives value. Industrial capacity drives power. And policy decisions today determine who captures profits tomorrow. The rules have been rewritten. Understanding them is no longer optional. It's essential. Now, let's make this personal. Most people live in a paper world. Paychecks, bank balances, and retirement accounts are just numbers on a screen. But these numbers only hold value if supply chains remain intact and prices stay predictable. When critical metals become strategic, everything else is affected. Every electronic device, electric car, and renewable energy system relies on silver, copper, and rare earth elements. If supply falters, prices rise, and ordinary consumers pay the cost. Your grocery bills, utility costs, and product prices are all connected to these minerals. This isn't abstract, it's your everyday life. The key to navigating this new reality is understanding the layers: extraction, processing, and manufacturing. Most people obsess over extraction because it looks dramatic. Big trucks, mining explosions. But the real leverage is in processing, the factories, chemistry, and industrial know-how. Control the middle layer, and you control the flow of value. So ask yourself, Where are you exposed? Which layers of the supply chain affect your life or investments? Which risks are political and which are structural? Awareness is your first tool. The next step is resilience, buffers, optionality, and patience. Understand the system, watch for shifts, and you won't just survive. You'll adapt faster than others. Let's bring it full circle. The coalition of nations setting a price floor isn't just about metals, it's a signal. Governments are acknowledging scarcity, risk, and the strategic importance of resources. They're taking unprecedented steps to ensure industrial and military readiness. Price floors, stockpiles, and domestic capacity investments create a predictable baseline, but the market will still fluctuate. Upside potential is uncapped, but volatility will remain. Understanding who captures the profits and where bottlenecks exist is crucial for anyone exposed to these commodities. The lesson is simple. Pay attention to rules, not headlines. Track policy execution, not just announcements. Watch permits, factory construction, stockpile management, and financing packages. These are the real signals. And never forget, metals like silver cannot be printed. Governments can legislate, treaties can be signed, and money can move, but physics governs supply. Extraction takes energy, refining takes skill, and demand is unstoppable. By connecting the dots, geopolitics, currency, industrial capacity, you can see the larger story. Silver and other critical metals are no longer just investments. They are strategic instruments, financial hedges, and industrial lifelines. The price floor is the signal that scarcity is real. But understanding supply chains, refining capacity, and geopolitical strategy is your key to staying ahead. Watch, learn, and position yourself for the decade ahead. The game has changed, and now you know the rules.